Okay, so May-June 2016, FAC1502 is the focus. It's a 2-hour paper. Exam technique is very important, right? So if this was the exam paper, you get the exam, you're going to have to do it. You go immediately to the timetable and you look for the easiest question. Okay, obviously multiple choice. I wouldn't do that initially. Why? Because it's multiple choice. So worst case scenario, if you're struggling to finish on time, then you just guess the last 5 marks. It's only 5 marks. Right, to have to spend more than 5 minutes on it would be a waste of time. Okay, so I wouldn't do multiple choice first. I would leave that as like worst case scenario, having to guess. I'd be looking at questions that I can do easily and simply. So here there was no easy question. 25 marks, 23 marks, 47 marks. That's a big one. Okay, 56 minutes. So there wasn't an easy question here. You would have to just pick one and complete it. Right, so I'm going to start with question 1 and we're going to go through it. Question 1 is disclosure, so that shouldn't be too bad. Statement of profit and loss and other comprehensive income. Okay, so here's question 1. Some adjustments. And the required says NB. Prepare the statement of profit and loss and other comprehensive income of NN Enterprises for the year ended 31st of December. That's important. That tells me what I need to do. So I go to my answer sheet. Question 1. Statement of profit and loss and other comprehensive income. Okay, that's what I've got. The next bit, we need to get the easy marks. Trial balance. If I'm looking at the statement of profit and loss and other comprehensive income, revision, the only thing that I'm going to be worried about is income and expenses. That's it. I'm not going to waste my time looking at assets and liabilities because I don't need it for this disclosure. Okay, so you need to stick to the time allocation. It shouldn't take me longer than 30 minutes to do. If it does, that's a problem. Okay. Alright, so capital, don't need its owner's equity. Drawings, don't need its owner's equity. Mortgage is a loan, don't need it. Land and buildings, asset. Furniture, equipment, asset. Bank, asset. Inventory, that I do need. Why? Well, when I see 1st of January and when I see 31st of December, I'm thinking opening stock. I know opening stock relates to the periodic system. I know that's going to be a cost of sale calculation. If I scan down, I can see purchases, there's confirmation. So I know I've got cost of sales. Okay, so I know I'm going to have sales. I know I'm going to have cost of sales. Okay, I'm going to change the disclosure slightly because I'm going to show it here as well. I'm going to show the working in terms of opening stock. Okay, plus purchases less purchases returns, add other costs, less closing stock. And that's your equation for cost of sales. Then I'll have a total here. Gross profits. That's what I've got there. Makes sense? Okay. I've already got opening stock, so I'm going to put that in. 100,000 opening stock. 100,000. Let's don't put it in brackets. Let's just leave it as 100,000. Okay, let's move it here. Okay, then I've got debtors control, asset don't need. Fixed deposit, asset don't need. Creditors, liability don't need. Sales, do need. 90,000 sales goes over here, brackets 90,000. Purchases do need because we've established this is looking at 500,000, not 100,000. Sorry, wrong line. 500,000 your sales. Purchases 283. 283,123 zeros. Okay, interest on fixed deposit is an other income. It's a financing receipt. Other income. Then other expenses, then obviously profit for the year. Okay, that's what you've got there. Bold that, underline that. Okay, let's look for the figures. Interest on fixed deposits. Interest on fixed deposits. The amount that was given in the question, 800. Okay, then you've got rent income. Rent income is income, that's easy. Just insert it where it needs to go. Rent income 2,400. Okay, what else do we have? Freight charges on purchases. That's part of the inventory costs. So that'll go here under other costs. So I'll change that to freight on purchases in brackets. I'm going to show 5,000. Okay, there's the adding the freights. Next, advertising expenses goes here. Advertising, open brackets. How much? 5, no, 9, 9 eighths. 9,800. Insurance 5,000. Insurance brackets 5,000. Credit losses brackets, how much was it? 2,600. Admin expenses, admin brackets, how much? 30,000. Interest on mortgage, no, municipal taxes. Municipal taxes brackets, how much? 9,600. Interest on mortgage, open brackets, how much? 3,000. Water, electricity, and telephone. Water, electricity, and telephone. You shouldn't show them all as one, but they are. We'll leave it as is. You're probably going to have to adjust for it just now. Salaries, brackets, 76,000. Okay, so that you need to do right at the beginning. Get all your easy marks, get the format right, and then you can go back and get the adjustments. Okay, does that make sense? Yeah. Okay, so on the 1st of September, in enterprises imported inventory to the amount of 39,000. Okay, that's importing inventory, so that's part of your cost to sell calculation, right? Okay, the additional costs regarding this imported inventory were as follows. Shipping fees, import duties, all of that stuff, fine. Inventory of 5,000 was damaged and sent back. The import contract stipulated the cost of modifying these products for the South African market will amount to 2,600. These transactions have not been recorded. So if they have not been recorded, you have to record it. Okay, so how do I record that? Well, that's easy. It relates to inventory. I'm importing stock of 39,000. So purchases, this amount is going to go up by 39,000. The additional cost related to the import inventory is shown as follows. Shipping fees, import duties, delivery fees, all of that needs to go to other costs. So freight on purchases, I'm going to add another line item there. Add other, what is it? Shipping, import, delivery fees. Okay, in brackets, I'm going to show 28 plus 33, 28 plus 33 plus 4100, close brackets. Okay, the inventory to the amount of 5,000 was damaged and sent back. That's a return. So 5,000 is going to be there for less purchases returns. Anything else? The import contract stipulates that the cost of modifying these products for the African market will amount to 2,600. That's part of the contract. That'll be part of the other cost. So we need to add another cost here. Plus an extra 2,600. Okay, and that's it. So we've read it. Okay, so now I've read it. I've left everything as is. Okay, so number 1, complete. Number 2, on 1st August 2015, where is 1st August 2015? It's during the year, because the year is 31st December 2015. Rented out part of a premise to Ollie, and that was for 12 months. A check for 2/4 for the entire year's rent was received on the same date. Okay, that's easy. Okay, so August to December, that's part of the year. Okay, so August, September, October, November, December, that's 5 months. 5 months is an expense, 7 months is prepaid. Okay, and you're paying for 24 months. Right, so all I need to do is show that. This was for what? Rent income. You rented out part of their premises. A check for 2/4 was received on the same date. hold on. On the 1st of August, NN rented out. Okay, so they rented out. So we rented out. Rented out part of their premises. Part of their premises. Rented out a part of their premises. Oh, okay, so NN is renting out their premises to Ollie. Okay, so it is income. Right, so it's over here, rent income. So what am I going to do? I'm going to subtract, open brackets, 2400 divided by 12 times, how many months are prepaid? 7 months. Times 7 months. Close brackets gives me an answer. Let's see what we get. Open 2400 times 7, no, 5 over 12 will give me the same answer. 1,000. Did you get 1,000? Okay, yeah, so that was prepaid. So prepaid portion was 7 months worth of rent. 7 months of rent. Okay, obviously 5 months was in the month because it's August, September, October, November, December. That is 5 months. Just to double check. Right, and that's it. There, I've adjusted it. Now, next one. So 2 complete. 3. Additional interest earned on the fixed deposit amounted to that but was not yet received. That's an accrued income. Okay, accrued income is an asset that increases the income. So the interest is going to go up plus 1060. Okay, that one's complete. An amount of 3.5 for the insurance was prepaid. If it's prepaid, it's too much. So we need to subtract 3.5 from the insurance. Minus 3.5. Okay, next one. The advertising expenses include a payment of 2.4 made to Court News magazines for advertisements we published from January. So that's from January, that's for next year. So again, prepaid expense. 2.4 needs to come off advertising. Minus 2.4. Another prepaid expense. Okay, it's advertising.
The insurance, you say?
An amount of 3,500 of the insurance expense was prepaid for the next year. So 3,500 is a prepaid expense for next year. It must come off this year. Minus. Prepaid for next year. Right, number 6. Salaries earned by employees not yet paid. If it's not yet paid, it's an accrued expense. It needs to be included. So salaries must go up by 800. Plus 800. Tick that. Okay, number 7. The mortgage bears interest at 8% per annum, payable quarterly in arrears on the first day of January, April, July, and October. The loan was entered into on the 31st of December, which is long ago. No repayment of the capital amount is during the year. That's fine. All I need to know is just what is the interest. That's all. That's all I want because I'm looking at income and expenses. I don't care about assets and liabilities for this question. Okay, so interest on, what is this? Mortgage. Did I have it? Yeah, I did have it. Just need to check the amount. Okay, so I currently have 3,000 here, brackets, working. What was the loan amount? Okay, now I need to look at one figure. Mortgage is how much? Where is it? There's it. 50k. 50,000 times 8% equals 4,000, I think. Let's check. 50,000 times 8% is 4,000. So I just need to put 4,000 there, and I need to show plus 1,000 here. Okay, it's an accrued expense. Add to it because you haven't shown enough. Next, that bullet tick. 8. Furniture and equipment was depreciated at 10% per annum. If it's per annum, that means I need to provide for the depreciation for the year. Using straight line. If it's straight line, that means it's on costs. Land and buildings are not depreciated. They normally aren't. Okay, so furniture and equipment. Where's furniture and equipment? There's furniture and equipment at cost. That's brilliant. Just take that and times it by, what is it? 10%. Yes. Okay, so depreciation here on furniture and equipment, open brackets, 10% times the cost of the furniture and equipment, which was 14,000. 10% of 14 is 1,400. Alright, and the last one, the closing inventory was valued at the lower cost net realizable value, 72. Brilliant. Thank you for the cost of sale closing stock, because now we can work it out. Okay, that was how much? 72. Okay, we need that. We were looking for it. Right, and that's the question. That's the end. Now we just need to wrap things up, make things look nice and neat. 500,000 stays there. Cost of sales, I need to work it out. So, opening stock stays there. Okay, this needs to come here as a working. Okay, just to show the working here. And the answer to that is that amount. Okay, what else do we have? We've got freight purchases, so that was 5,000. Okay, that didn't change. Hold on, less purchases, delete, returns, add freight and purchases. Was freight and purchases the same amount? Looks like it. Yeah, freight and purchases was 5, and the return was 5. Yeah, the return was also 5. Okay, so that was a coincidence. This was less, so that's minus. Okay, this is a plus, 5,000. Then you're adding all these other costs, so I can just sum up all of that. And less the closing stock, make that a minus. Oops, minus. Okay, so that's what we've got. So in terms of cost of sales equals negative brackets or negative sum bracket, all of that. Okay, so there's my cost of sales. There's my sales, there's my cost of sales. Gross profit would be this minus that. Gives me that gross profit. Okay, interest on fixed deposit, just add up all of this. Gives me 18,600. Just need to delete this. Okay. Advertising, I needed to adjust. That was given in the question. Okay, so adjusted, there's the answer. Insurance, I have to adjust. There's that answer. Credit losses didn't change. Admin didn't change. Municipal didn't change. Easy marks just for writing in the amounts. 9,600. Ooh, wrong amounts. Water, electricity, and telephone didn't change. 10,000. Salaries did change. Okay, other expenses, sum up all of the expenses. Gives me that as a negative figure. Right, gross profit plus other income. So other income, I'm going to have to add up these two amounts. Okay, gross profit plus other income minus other expenses gives me the profit for the year. This plus that minus this gives me profit for the year. That was 25 marks. Alright, I see admin is 30,000. I wrote 3,000 here. Okay, so I need to make that 30,000. Right, there we go. Now that's in line with the solution. That's perfect. Okay, sorry, just a slight error there. This figure, when I initially did it, I wrote down 3,000 instead of 30,000. Okay, so once I fix that, the other expenses go up. This isn't a profit, it's actually a loss for the year. Okay, so just be careful with the numbers. That's a loss for the year. Okay, so now we've completed the question. The question is in line with the solution. Okay, that covers that question. Now, next question, question 2. 23 marks, 28 minutes. What have they given you? Journals, they've given you sundry entries, they've given you balances, they've given you additional information. Required is important, NB. What do they want? Prepare the following accounts properly balanced in the general ledger. There we go, general ledger. So what is that? Big tier accounts. A tier account for debtors, a tier account for creditors. So I go to my answer sheet, I draw massive tier accounts. That's big enough for debtors. Debtors control, bold, copy, creditors control. So let's see how this one went. Okay. Alright, starting with this. I need opening balances. Okay, balance at 1st March. This was 31st March 2016. So we look at transactions for the month of March. There's debtors, there's creditors. There's my opening balances. They gave you debits and they gave you credits. So you can show them as 2 separate balances, or you can show them as 1. I'm going to keep it separate because they gave it to us as separate. Right, so 1st of March 2016. Balance brought down. Balance brought down, balance brought down, balance brought down. Okay, so debtors had 32,780, 32,780 there. And they also had a credit balance of 1,780 there. Okay, you can show one balance there and then show this balance minus that balance. Right, it doesn't matter. Okay, I'm just showing it separately because they gave it to me separately. 2020 here and 24,720 there. Okay, so that's the easy bit. So now I can tick that, I don't need this again. Looked at it. Allowance for credit losses, I don't need that for a debtors and creditors control question. This affects my credit losses. And it's also used for disclosure in a statement of financial position. Okay, I don't use it for debtors and creditors. Okay, so it's not necessary. You can ignore it. Right, what do I have? Okay, so let's put all these things in. Sales journal. If I'm selling, I'm affecting my debtors. If I sell, debtors owe me more, they don't owe me less. Debtors will go up. How much was it? Sales plus VAT. Ooh, okay. When I see VAT, I need to ask the question, VAT vendor or not? That's the big question. Question mark. We need to see in this question, did they say anything here in the question whether this person or this business was a VAT vendor or not? No, they don't. Okay, so problem. Okay, problem with the question. They need to tell you, is this person a VAT vendor or not? You can't guess. Right, so I'm going to assume that they are. They should have told you that. Okay, but I'm going to do it because it's more difficult if it's a VAT vendor. If it's a non-VAT vendor, then I'm not even going to care about the VAT. And that doesn't help because you're not going to show any VAT, and that's pointless. Okay, so I'm going to assume that this is a VAT vendor, just so you've got that solution for it. Sales journal, sales plus VAT. That means this is the VAT inclusive amount. Okay, so if it's VAT inclusive, it's 114%. Okay, I need to split this, input and output. If I'm selling, I'll have output VAT. Output VAT, sales journal. Right, what will I show? I'll show the VAT separate from the VAT exclusive, 16,840. So exclusive, 16,840 times 100 divided by 114 gives me that figure. Same figure, 16,840, 16,840 times 14 over 114 gives me that figure. If I add those two amounts together, I get 16,840. Okay, so I've split it, I've shown it separately. Right, it's better to show it separately. Why? Because they might be a VAT vendor. Right, if you didn't show it separately, then you would have just shown this as one amount, 16,840. Okay, if you assume that they weren't a VAT vendor, because then we wouldn't claim any VAT, you wouldn't pay any VAT. Okay, if you deducted the VAT, that's fine, you still need to show it though. Okay, because remember, what do debtors owe you? They owe you the VAT inclusive amount, don't they?
Yeah.
Right, when they buy from you, they pay you everything, including the VAT. Okay. Purchases. Obviously, creditors are affected. Creditors are going to go up. 12,840. 12,840. Purchases journal. Input VAT. 12,840. 12,480. 12,480 times 100 divided by 114 gives me that. Same figure, times 14 over 114. Okay, it gives me that. Round off to nearest cent. Nearest cent, that's fine. Okay. Right, next, tick, tick. Sales returns will reduce my debtors. So 1,200 will come off. It's going to go on this side. Sales returns. Output that will be reversed out. Sales returns was how much? 1,200. 1,200 there. 1,200 here. Round off to the nearest cent. There's the sale return. Sales returns will reduce my debtors. Purchases returns will reduce my purchases. 820. $820, 820, show the nearest to the nearest cent. There we go. Okay, purchase returns reduces your creditors control. Sales column in the cash receipts, those are cash sales. It doesn't affect debtors or creditors. Don't need it at all. Purchase column in the cash payments, same thing. It's a cash payment. Doesn't affect debtors or creditors. Ignore it. Debtors control in the cash receipts. Ooh, there I need something. Why? Well, this is the amount that we get from our debtors. They pay us that. Right, so how much they pay us? 22,750. That's the debtors control in the cash receipts journal. But then also look at this. There's a discount here. Those two go together. Okay, because it's in the cash receipts journal. So your debtors, the total amount was 22,750, but there was a discount. So the net amount that you're going to pay is going to be the difference between those two figures. 22,750 less one. So bank, CRJ, brackets 22. How much was it? 22,750. Less, what is the discount? 3,500. Close brackets. Right, so that gives me a bank figure of whatever this is, and 3,500 is going to be the discount figure. Discount allowed, CRJ. Right, so that's how we record it. Okay, the debtors figure in the cash payment represents the full amount. The amount that you receive is the net amount. The amount that you give as a discount is the discount amount. Okay, that's it. Debtors control in the cash payments. When do I have that? That's bank reconciliation. That's a check RD, dishonored check. Dishonored checks always go to the cash payments journal. So you're going to increase your debtors because they didn't actually pay. How much? 13200. Right, creditors control column in the cash payments journal. That means I've paid my creditors and I've also got discount received here. Okay, so again, the one amount minus, so 2980 minus the discount gives you the net amount that you actually pay. And then you'll have the discount. Discount received, CPJ. The discount that I received, 2890. The net amount is bank brackets, how much was it? 3298, 32980, 980 less 2890, close brackets. Work that out. That gives me that figure. Okay, that plus that gives me 32980, that's right. 32980. Sorry, this one. 32980, yes, perfect. So now we've looked at all of that. Okay, next, sundry journal entries. Okay, so here you've got debtors control. These are sundry journal entries. So in your debtors control, you had journal debits and you had journal credits. So we need to process that. In my debtors control, I had journal debits from the general journal, and I had journal credits. Okay, so the journal debits for debtors was how much there? 2760. Credits 430. General ledger, creditors there, creditors control. Nothing there, 0 there, 840 there. Nothing there, 840 there. Okay, so now I've looked at that. Balances I've looked at. Right, last bit. Additional amount of 145 relating to debts that disappear should be written off as irrecoverable. That's bad debts. That decreases your debtors. Credit losses or bad debts. General journal. General journal for an amount of 1450. Writing it off. Tick that. Next. The credit balances of debtors and debit balances of creditors on 1st March should be transferred to the creditors and debtors accounts respectively. Okay, so what are they asking about? They're asking about this. Get rid of that balance, get rid of that balance. Okay, so let's start with this one. I've got a credit balance for my debtors. How do I get rid of a credit balance? I debit it. Okay, so I'm going to debit the credit balance in debtors. So if I'm debiting this, I'm going to credit that. Okay, so 31st of the 3rd, this would have been a transfer from, this will be creditors control, asterisk, that's the transfer. This is the tricky bit of this question. Okay, transferring that to there.
Okay, if I just minus that from the beginning.
No, you can't. You have to show it. It's a transfer. That's what they said in the question. Okay, they said it was transferred, so you have to show it. Okay, you have to show it. Okay, alright, so this is the amount that you are transferring, and I've now got to transfer this one. Okay, so there's another one. There's creditors control with the debit balance. How do I get rid of a debit balance? I credit the account. Okay, so credit this account, debit this. Okay, so to there, same description equals that. Okay, there we go. Now we've covered that one. Number 3, the allowance for credit losses should be increased to that. Well, thank you for telling us that, but this doesn't affect debtors or creditors. This affects credit losses. Credit losses will be affected. You would debit the credit losses and credit the allowance, or the opposite, depending on whether you're increasing or decreasing it. It's not going to affect these two accounts. Don't need it. During March, merchandise, the value of that was purchased on credit. This transaction was erroneously recorded in the sales journal and posted from there to the general ledger and debtors ledger. Okay, that's an error. Right, so how do I approach errors? I need to look at what happened, and I need to look at what should have happened. Okay, so what happened? Well, during March, merchandise to the value of 2760 was purchased on credit. This transaction was erroneously recorded in the sales journal. So the sales journal transaction would have been debit debtors and credit sales. Okay, that's what I would have done. Posted from there to the general ledger and the debtors ledger. That's bad. Okay, so I shouldn't have done that, but I did. What should I have done? This was a purchase of merchandise, so I should have debited purchases, or inventory in this case, and credit creditors. That's what I should have done. Okay, so are you happy with this? No, you're not. This needs to be reversed out. Okay, so how do I decrease debtors? I would have to credit this and I would have to debit that to remove this error. Do you agree? Okay, so credit the debtors. Let's fix the debtors. See, this is the distinction part of the question. Everything else is easy. Now they need to challenge you because they can't make getting a distinction easy. Okay, so this is the credit for debtors. So 31st of the 3rd. This would have come from the sales because I'm reversing it out. 31st of the 3rd. Sales, asterisk, the error being reversed. General journal. Amount, how much? Where was it? 2736. 2736, there we go. Okay, and then they say, now we need to process. So that I've done. I've fixed this mistake. That's fixed, that's gone. Now I need to process this. Okay, credit creditors because of inventory. So credit creditors because of inventory. Okay. Oh, same amount, eh? Yeah. Right, have I finished the question? Yes. Now I get easy marks. Okay, always remember to do this. Balance. Okay, you will always get marks for doing it. So just do it. Even if you made a mistake somewhere. Okay, sum up the left and the right. Okay, you would expect the left here to be bigger, which it is. Okay, so you'll have 31st of the 3rd. Balance carried down, and then you'd have 1st of April. Balance brought down equals whatever this is. This minus the sum of all of them. No, why didn't you like that? Let's fix the formula. Okay, let's try again. This minus the sum of all of that. Still doesn't like it. Why? Circular reference. Oh, okay. This total needs to be there. There we go, that's better. Okay, right, so those are the two totals. This side was bigger than that. Okay, so this is obviously the total less the sum of those amounts. Okay, this side we would expect to be bigger. That is 44. This side is 35. Okay, so I want the big amount on that side. Then I'm going to have this minus the sum of all of that. Gives me that answer there. Balance carried down, balance brought down. Save. Okay, that's it.